Let's very quickly go to our first guest this morning, and Arvind Sanger, Managing Partner at Geosphere Capital, and Rahul Chadda, who's the Founder and Chief Investment Officer at Shikara Investment Management, joining us this morning. Gentlemen, thanks so much for taking the time, and very good morning to you. Rahul, I'll start with you first. In the absence of any significant headlines, or headway, if we can call it that, in trade negotiations, where does the focus shift, in your opinion? And is there, in your opinion, an impact that you see on account of this entire Jane Street issue?
Yeah, so I think right now what happens is because we've seen a sharp rally post May 9th in markets give away some of the gains. Quarterly earnings start in a week from now, and I think those are what are going to provide the cue for the markets. Honestly, I'm not worried too much on the trade deal. Invariably, over next 30 to 45 days, you'll see that happen. See the difficult frameworks with China, Vietnam, which are countries having huge trade surplus with the US have been agreed. So this is a lot of last minute posturing to get countries like Japan, India, which have held on to the ground to the negotiating table. So I think it's more of a market looking at earnings because it's been a sharp rally over the last 3 4 months. Some pullback is inevitable here.
And on the Jane Street issue, do you anticipate that there's going to be any short-term impact of that? A little bit of caution?
I don't think so.
No.
I don't think so. See, logically, I think stock exchanges should have noticed a lot before. What happened was that everybody was happy with the volumes, the money being made. But invariably, we've seen many a times before, the music invariably stops. So it's good that it's happened now. And we saw that also, all these margins, limits being tightened for the retail last year. So all this is healthy from a medium-term perspective.
Arvind, hi, good morning. Do you agree with that perspective that the action on Jane Street and the response that they've given, apart from a little bit of impact on certain stocks, of whom Jane Street were clients, will not see any major impact on derivatives volumes for India?
Well, it'll definitely have an impact on derivatives volumes because it's not just Jane Street, but if you look at in general, high frequency trading, market making, those have been very important volume providers for the market. Now, clearly, retail investors have been losing money and the professionals have been making money. But, that's not unique to India. So obviously, I'm not privy to all the details of what SEBI is claiming Jane Street did. But the reality is, there is going to be some effect on liquidity. If a lot of the market makers and the high frequency traders pull out. So I think it's a little bit of a mixed blessing to try to protect retail investors and have no impact on volume. I don't think there's a free lunch there.
So Arvind, that's with regards to where, clearly, so the impact in terms of volumes on the derivatives market will come in. And I think that's exactly what we saw in terms of BSE trading under pressure. And you had names like, Nuvama and Angel One that were down in trade as well in terms of Friday's session. But apart from all this, the other aspect that even Alex alluded to with regards to the trade deal, a quick commentary on that. How are you looking at India? Because now we are talking about a mini deal deadline and then the larger one that will be in the offing from there on. Because things are uncertain, how do you think FIs would be looking at the Indian market, Arvind?
I agree with what Rahul was saying. I think at this point markets have become a little bit desensitized to this whole trade talk because the reality is that President Trump has put these deadlines and nobody's been jumping through hoops to get there. He's criticized Japan recently. Clearly, EU has had a bit of a rough patch with the US, and India has obviously had been promised, but nothing has happened. So other than Vietnam, there's a deal there. And then China, there's some kind of a deal there. But, I think those are the two big ones in terms of big deficits, like you just mentioned with the US. I'm not too fussed about it. I think clearly what President Trump and his team are recognizing that trade deals take a long, long time to negotiate. There are a lot of complicated issues. And just this simplistic, I'll put a thread out there and somehow magically a trade deal will appear. I think President Trump is realizing it's not so simple. So my sense is that investors are kind of, assuming that something will happen. What that nature will be, we don't know. But in the meantime, I think the real issue for Indian markets is earnings or earnings growth, and some of the high frequency data in India, like auto sales, electricity demand, other things, and government capex, and frankly FDI. None of those have been particularly
Right.
exciting. So I think that's the challenge for the Indian market right now, not the
Fantastic.
trade deal.
Yeah, absolutely. You both said it, and that sharpens our focus this morning. Thank you so much, Rahul, as well as Arvind, for joining us this morning. Pleasure speaking with you as always.